What is up, YouTube? Today we're going to be talking about the COVID-19 and its effect on the stock market. So, as we can see here, the stock market has fallen over 10% in a span of 3 days. This is the fastest 10% drop in the history. But again, we've also seen the best day in history on Monday. This is recorded before the market opens on Tuesday. But on Monday, we have seen the best day with over a 4% gain. So what happened? So basically there's a sell-off in the stock market. What is a sell-off? A sell-off is when a substantial number of shareholders sell a specific stock. It is called a sell-off. But in this case, it wasn't a specific stock. It was rather the whole stock market. S&P 500s were being sold. All the index funds were being sold. But so this is why cash is sometimes not trash. And this is what I did. I did have a lot of cash before, and I bought a couple of stocks. So why do many people say cash is trash? Well, there's something called inflation, and inflation is where the price of goods increases for a period of time, meaning the purchasing power of money decreases. Inflation is about 2 to 3% per year. So when your money is worth $100 this year, it's gonna be worth $98 the next year, in worth of goods, not in worth of the amount of money you have in your hand. But what can cash do? If you have cash at hand when the market does correct, like as we've seen in the previous case, you can buy stocks at a cheaper price. But when the market does correct, do not panic sell. That's basically what happened. Because the market fell so much, people started selling. But what's the point of buying a stock at a high price and selling at a lower? Might as well you just wait it out and it'll still go back up. To help you guys, there are many things you can do. One thing is just don't look at your portfolio. And another thing is just look at the amount of stocks you can buy at a cheaper price. Look at the quantity instead of just looking at the how much your portfolio is worth. And just keep holding, because buy low and sell high. But even if you don't have money, just keep hold and do not panic sell. So what Warren Buffett says is be fearful when others are greedy and be greedy when others are fearful. Well, obviously there's a lot of fear in the market because of the COVID-19. So this is your perfect opportunity to start buying stocks. And so what stocks am I buying? So as we can see, I've bought Microsoft, Apple, Tesla, Uber, Disney, and Carnival Corp. And we will be looking to as why I bought them in future videos. So as we've seen the stocks I've bought Disney, Uber, Tesla, Apple, Microsoft, and Carnival Corp. Even though Tesla, Apple, Microsoft, and Carnival corporations were just additions to stocks I already had, Walt Disney and Uber are new positions. So the Walt Disney Company, together with its subsidiaries, operates an entertainment company worldwide. The company's media network segment operates domestic cable networks under Disney, ESPN, Freeform, FX, and National Geographic. They also have many parks, as we've seen Disneyland, and they also have many resorts and cruises. And as we've seen, they've also produced many movies. They own Marvel, Lucasfilm, Pixar, and Fox. So why did I buy this stock? Well, this was always a stock I was intrigued in. But there was a huge fall this past week. So if you look at the past 1 month, its high was 141 and it is at 120. Now if we look at its 52-week high, it's a 153 and its 52-week low is 107. Keep that in mind. And its P ratio is also relatively low compared to the entire market at 20. Around the whole market's average P ratio right now, especially the technology sector, is 25. But I know Walt Disney isn't part of tech, but and they also pay a dividend of 1.5%. So this isn't really a growth company. This is more so a dividend company. Another stock I have bought is Uber. Uber I bought it pretty cheap. Its 52-week low. Its 52-week range is $47 from when it ranged at IPO, and its 52-week low is $25.58. Its market cap is $58 billion, and it's not profitable yet. This is a rideshare service, and yeah, that's if you look at what exactly does it do, well, Uber technology develops and supports proprietary technology applications that enable independent providers of ride sharing and meal preparation and delivery services to transact and user worldwide. Well, they do own many companies. They own Uber Eats, Uber, and many more. And another company I've bought is Tesla. Tesla has is on the higher range of its 52-week range. Its 52-week low is $176, and its 52-week high is $968. The reason I bought this is because it did fall to $670, and I didn't have as many shares I would like, so I bought a couple more. Now, even though it's not profitable, we could see profitability in the next couple earnings reports, and the past two earnings reports, Tesla has been proven to be profitable. And as we know, Tesla is known for its cars, but it's also going into electric batteries, which can also be another huge growth. So Tesla Inc. designs, develops, manufactures, leases, and sells electric vehicles and energy generations and storage systems in the United States, China, Netherlands, Norway, and internationally. And we do know it's created a mega factory in China, but the sales may slow down because of the COVID-19. But this is definitely a stock I want to hold for the long term, as its market cap is only $137 billion, and it's not just looking into cars anymore, but also another electric power source. And this is a stock I have bought, Apple, and this is my biggest position. So its 52-week high is $327, 52-week low is $169. It is the highest valued company, either Microsoft or, yeah, so it's the second highest valued company behind Microsoft. It's also a dividend company. As per se, Tesla I only bought for the growth. Apple is also dividends and growth, and Apple is a family name. Everyone knows what Apple is because they sell iPhones, MacBooks, iPads. You guys all probably have its product. And if we see its chart, on the week high, it was, 1 month. The highest it's been is 320 this month, and it's also fallen down to 260, which is when I bought it. Around there, I bought it. And if we just look at it, this is a undervalued tech company because average P ratio for tech industry is 25, while for Apple it's 23. Even though that's not a huge difference, it's something. And I will be doing, let's say, if it's a buy or not video for each of these stocks. And the last two companies I bought were Microsoft, and obviously because they've fallen, it pays dividends. Its 52-week high is 190, 170, 190, and its 52-week low is 108. The last stock I have bought is Carnival Cruise, and let's just go to the chart. So this stock has been hitting tremendously over the past 2 weeks, and as we can see, its 52-week high is $57, and it is on its lower range, as are all the stocks. But if you just look at its 1 month, it was at $42, and it's fallen over $10. So it had over decrease of 20%. This is as we've seen before, the intrinsic value for Carnival Corp is $62. Obviously, shouldn't base everything on its intrinsic value, but that is something you should keep in mind. Its dividend yield is 6% as of now. When it was at $42, it was around 4%, because it pays around $2. This is a cruise company, obviously, and it has most of its market share. Its only competition is mostly flights and other forms of transportation. Operates a leisure travel company. The company ships visit approximately 700 ports under the Carnival Cruise Line, Princess Cruises, Holland American Line, Seabourn, and P&O Cruises. I have made a analysis on this stock, a video analysis on the stock. If you want, you guys can go check that out. And yeah, this is just what I've been doing. I've been buying and holding. Please do not panic sell. And even if you don't have money, in case you want to buy more shares, do not sell. Just keep hold. It will eventually bounce back. And yeah, leave a like and subscribe. Comment down below what videos you'd like to see. And